Okay, fantastic. We're going to get started. What we're going to be focusing on today is the seller's obligations under the FIRPTA rules and the interplay with your FAR contract so that you can make sure precisely how we do it with the interplay of the Florida rules and the federal rules. So without further ado, here we go. This is going to be a reminder for some of you, and I'm hoping this will be a repetition that from those that saw it last week, it'll sink it in your head. So what is FIRPTA? As simple as this. The IRS realized that foreign sellers owe capital gains on the money that they make in the increased value of their property, the same way American sellers do. The issue is, if you're from Venezuela or Peru or Mexico or Spain or England or fill in the blank, how is the IRS going to get that seller to make sure they pay? That's an obvious answer. It's very hard and expensive to do, and in some countries, legally impossible. So they realized, okay, we've got to come up with a strategy so that we can make sure that we collect the money that we're owed. We know we don't have a mechanism to make the seller follow their obligations. So what we're going to do is we're going to make it the buyer's problem, because the buyer is going to be purchasing property in the United States that the Internal Revenue Service can then place a lien on if the taxes are not collected. This is not a moral thing, and it's not even, it doesn't even make business sense, but it does make sense if you're the IRS and you want to make sure that you collect as much tax as possible. Then it does make sense. So think of it in your mind as just making it a buyer problem to safeguard collection. Now, what are the rates? First of all, if it is less than or equal to $300,000 and the buyer is willing to sign a document that says they intend to reside there or their family at least 50% of the time over the next 2 years that the property is used as a residence. That is the buyer's choice. If the buyer does not want to sign that document, you as the seller have no way to force them to do so. Okay? It's completely within the buyer's control. And I can tell you, the days of a title company or someone kind of schnookering over the buyer on this issue are going away. Buyer's agents are getting smart. They realize that allowing their buyers to sign these kinds of affidavits really just puts the buyer on the hook if they can't stay to live there as they had planned. Then they've got to answer to the IRS. And it just does a favor for the seller that the buyer doesn't need to do. So you're going to see fewer and fewer buyers willing to sign the documents needed for this exemption, the under 300,000. Now, the regulations allow for the collection of only 10% if it's above 300 and less than $1 million with the signature on the same affidavit. Well, if buyers aren't likely to do it if the house is worth 250, you think the buyers are likely to do it if the house is worth $1 million? No, because they've got more money to risk. But technically, if they're willing to sign this, that is 10% instead of 15. If they will not sign, or it's above $1 million, it's 15%. Does anybody have any questions on how these? Remember, it's all the reduced holding, either no holding, withholding, or 10% relies entirely on the buyer's choice to sign their affirmation that they're going to use the property as residence after they purchase. Okay. So who is excluded from these requirements? First of all, any U.S. citizen or green card holder. And Dory, I'll send anyone who wants it this PowerPoint after the time. Yeah. Okay, so you have a U.S. citizen or green card. Listen, watch my mouth move very carefully. Having a taxpayer identification number doesn't work. Being here on a visa doesn't work. They have to have official green card status or be a United States citizen or pass, important for sellers agents to know, the substantial presence test. Basically, what the IRS did is it recognized that some foreigners are here and they have such interplay with the United States, either the way they do business or their obligations to file returns anyway. So they've kind of made an exception. If it's someone who meets a substantial presence test, They do not have to withhold, even if they're not a green card holder or a United States citizen. So it's another exemption. So you should look at it in your mind. There's the exemptions are as follows: US citizen, green card holder, or substantial presence test. That is it. End of discussion. Now, the green card holder and US citizen thing is very easy for you guys to figure out. The substantial presence test is not. It focuses on, it has escalating numbers of days that you have to be here over 2 years worth of period. You have to actually have slept here overnight for so many numbers of days. So this is what I'm going to tell you guys to do. This is very important advice. Listen carefully. If your seller says, well, I don't have to pay because I have a visa, or I don't have to pay because I already filed tax returns, here's what you're going to say. You may meet the substantial presence test. I cannot tell you that. Neither can a bookkeeper tell you that. You need to consult either with a certified public accountant that understands FIRPTA. And Joni is on this call, and I can tell you we have had people who have presented themselves as knowledgeable about FIRPTA as bookkeepers, and they've been completely wrong. So you're going to need an actual CPA here, guys. This is the time you're going to tell your folks, if you usually use H&R Block, this is going to be a year that you need to use a tax professional. Now, the good news is if your seller is here under the substantial present test, they may already have a tax professional helping them, because doing a foreign return is much more complicated than doing a United States return. So they probably already have one, but that is not an analysis that you can make, the title agent can make, any regular person can make. It must be made by someone who can actually help your seller be able to certify that that's a true fact. Now, at every closing, whether you know it or not, because sometimes it's a separate document or sometimes it's embedded in other documents. At every closing where money is not collected, there is a statement somewhere in that closing file that the person is a US citizen with the or green card holder exempt from withholding. There is a form that they are allowed to fill out. And here's the good news. The buyer doesn't go behind that form. So if your seller is comfortable signing the form, that's all your seller has to do. Your buyer does not at that time have the ability to say, I'm not accepting that form. The only way they can refuse to accept the form is if they know that the seller is lying. Otherwise, the buyer is to rely upon the seller's determination about whether they are, in fact, meeting the substantial presence test, is basically what they would be doing. Does that make sense to everybody? There is no duty to inquire, no duty to investigate on behalf of your buyer. They're allowed to assume that the seller is telling the truth, and they cannot refuse to accept that certification unless they know that the person is lying. Any questions about that? Now, with good news for the IRS is it doesn't matter if the seller's lying in terms of penalties to the buyer. As long as the buyer has that certification, that's all they need. To get in trouble with the IRS, to get in trouble, the IRS would have to prove that they knew the seller was lying. Okay? So don't be doing a lot of digging around. Don't be asking questions. Get your certification signed and move on down the road. Okay? Because it's not for you to decide, but it is for you to refer them to the right persons that can help them decide. We talked about the length of these, the 183 tests. We talked about these reduced withholdings. Now, importantly, another way for the seller to avoid withholding, we've said number one, US citizen, number two, green card, number three, substantial presence test, less than $300,000 and the buyer's agreeable to use it as a residence. All of those are zero. The other thing that would be zero is if your seller applies for and receives a withholding certificate that says zero. So the withholding certificate is applied for, and basically you should understand that what the seller is doing is submitting a proposed tax return. In other words, their tax professional figures out how much they would owe. You know, they're going to have a $100,000 gain, but they've got $75,000 in repairs and other things. So it's really only a $25,000 gain. And if the IRS likes the way that paperwork is issued, then they will give to the title agent, to the seller to give to the title agent, a letter that says, hey, You don't have to do 15% or 10%. You only need to collect $7,000 because we believe that's the amount that's owed. Does that make sense? That withholding certificate trumps the 15% or the 10%. The withholding certificate says precisely how much is to be withheld. That is a way for your seller to get out. And sometimes your seller doesn't owe anything. Your seller may be, especially selling in this market, if they buy recently, they might actually be at a loss. So that's an important analysis, and they need to do that early. Here's the problem. FIRPTA department has always been understaffed and slow. Now with the IRS layoffs, it's even slower. You need to start talking to your seller immediately at the time of listing and making sure that you are telling them, if you want a chance at getting this withholding certificate, you better start working with your CPA now. So all they have to do is plug in the, here's what the sale price was, send off the contract, and they're done. You must do this in writing, guys, and not via text. And the reason you want to do this is because that's the end of your obligation. You've advised your seller that is foreign that they need to work with their CPA to get the withholding certificate. If they don't do that, that's not your problem. But do advise them in writing, because you don't want to get to closing and them say, well, if you had told me that I could have gotten a withholding certificate, because sellers don't like withholding. And you know why? Because to get the money back, they have to file a tax return. Well, I just told you guys that FIRPTA was behind, right? We had a file not too long ago where we were still working with a seller who was trying to get their money back more than 18 months after closing. And the IRS had not processed their payment, had not processed their return. And so they're sitting there with the IRS sitting on their money. And I don't think the IRS is doing that on purpose. It's literally a matter of staffing. They just don't, they never had enough people in the FIRPTA department to start with, and now they really don't. I say all that to say, prepare your seller. It's gonna take a hot minute, so they need to get started right away. And then if they don't, that's not your problem, guys. Now, the other thing that sometimes happens, which is at least halfway there, is if your seller can prove they've at least applied for the withholding certificate, even if they haven't gotten it, if they can prove that they have at least applied for it, then guess what helps them? The title agent then can withhold the money in their own escrow account and doesn't have to send it straight to the IRS where it just sits in a pool forever. It can be withheld in the escrow agent's account, and then the escrow agent can release the money when the IRS gives the withholding letter. So think of it this way. Your seller has applied. They don't have time to have an answer, but they can prove they've applied. At least they've gotten further down the road. The closing agent will withhold the correct amount, but they don't send it to the IRS like they do in the other circumstances. They withhold it in their escrow account as they wait for the IRS to issue the withholding certificate that it didn't have time to do before closing. And so then it comes later. It could come 30 days later. It could come 6 months later. But it can sit in our escrow account as long as it needs to, so long as it's been applied for. And then once we get the letter from the IRS, then we have 20 days to send them the money. Okay. So it is a better option. So at least have your sellers prove they've applied for the withholding certificate, even if they haven't gotten it. It's a lot better to be held in our escrow account, and we're able to give you the money back when we get the letter, than waiting forever for a return to be processed and the money to be linked with the return, which they get wrong all the time. So there's lots and lots of good reasons why at least have them prove that they've applied for the withholding certificate. Any questions about that? I want to make sure that we've got your answer, that you guys good. Okay, so what are the seller's obligations? We're going to go over what the contract says, but overall, the seller has to certify whether they're foreign, let you know if they're foreign. If they're not, sign that non-foreign affidavit. Provide that information to the buyer, the withholding certificate. If you've obtained it, give a copy to the buyer and the closing agent. Remember, your seller needs to be warned that they might have to bring money to closing. They do not get to say, oh, I can't do it because I don't have 15% proceeds coming to me. That is not an excuse for not going through on the contract. So if he ain't got 15% of proceeds left over after the closing costs, then he gonna have to bring money to the table unless he has the withholding certificate, which says less. Does that make sense to everybody? Again, if he was making that little of a profit, he's not going to owe 15%, right? That makes sense. But if he's at least applied for the withholding certificate, we can hold his money until the IRS recognizes that he only owes $2,000 or something, if any. Make sense? Yes? Okay, wonderful. Now, sometimes you'll have an unusual situation where you'll have Meredith and Dory owning property, and Meredith is foreign and Dory is not. Guess what? If Meredith and Dory are joint owners, half of the sales price is subject to FIRPTA withholding. My half as the foreign person. Any questions about that? Wonderful. Let's look at what the contract says. First of all, you can see I got you the lines here. This is the very beginning of the contract. This is the language that requires your seller to fess up if they're foreign. If they fail to do this, a buyer could cancel the contract because they have not met a disclosure obligation. They are to disclose to the buyer that they are foreign. When you want to do that is a matter of discussion between yourself and your broker as to what procedures that you want to implement to make sure that this information is being communicated. It has to at least be done by the time that the offer is accepted or countered. Okay. You can put it in the seller in the MLS if you want to. I mean, if that's the way you want to disclose it, but it does have to be disclosed, and failure to disclose will allow the buyer to cancel the contract. Because think about it. If I'm a buyer and I'm purchasing from a seller and I know that I have all these obligations under the IRS, and I went to last week's presentation, so I know now as the buyer, it's my obligation to make sure these forms are done correctly, to work with the CPA. I'm thinking as a buyer, maybe I don't want to buy, or maybe I'll pay $5,000 less. I don't know. That's between the buyer and the buyer's agent. It has to be disclosed so that the buyer knows what they're buying and knows what their obligations are going to be. Now, the next section of the contract is in the title standards section. And for those of you who don't know, these title standards are adopted by the Florida Bar in conjunction with the Florida Realtors Association as to what the common practices should be and what Florida law says should be. So some of this is a combination of that. So let's talk about it. First of all, the section starting at line 551 through 577. This is on the as-is contract, but the same language is in the standard FAR contract. And remember, Daryl, you should always be using a FAR contract. Do not use anything but a FAR contract, okay? Unless your broker tells you otherwise, and remember, I'm not your broker. All right, so this kind of lays out what I just explained to you all. It says that it requires the buyer to withhold up to 15% unless there's the exemptions. Remember, we talked about those. Or there is a withholding certificate that has been at least applied for. This is the requirement that you say if you're not foreign, that you have to sign that written certification under penalties of perjury that you are, in fact, not a foreign person. Remember, some title companies are going to do this in a separate document. Some title companies like ours do it in the seller's affidavit so that we know it's always there. You just need to find it either as a separate document or in the seller's affidavit. It's going to be in there. You need to have that to make sure your buyer is protected. Starting at 562, that this is the explanation about if there's a withholding certificate that's been received that provides for reduced or eliminated withholding, that you don't have to have withholding. If you have submitted a completed application for that withholding certificate, but you haven't got it back, it is the buyer's option, either timely remit, in other words, just send all the money up, or place the fund in escrow at seller's expense. We, almost without exception, have buyers agreeable to us holding the funds. Even the most careful buyer, I think, is aware of the difficulties of dealing with the IRS and doesn't want to be any more difficult to the seller than they have to. But it's important for you guys to note, according to line 568, this is buyer's decision whether or not they are going to rely upon whether you've applied for the withholding certificate or not. Does that make sense to you guys? Do we understand that? Having said that, buyers almost always agree, but it is at the end of the day the buyer's choice. And if I represented a seller that was foreign, I would be putting those terms in the offer so that nobody can later change their mind. I would say that buyer will sign this and there will be zero withholding because they intend to live there for 2 years or whatever, as much as you could to try to lock down and protect your seller's rights or options. At least say if there's no withholding certificate has been obtained, the money will be placed in the escrow at the seller's expense, which will be in the title company. At least do that for your seller. Any questions about that? And then, of course, I've highlighted again, just as a reminder, that it's the buyer who's supposed to be filling out these forms when the money is sent up. That's the 8288 and the 8288A. The buyer is the one that has to prepare those forms. And remember, we talked about how strange that is, because on the one hand, the seller is the one who knows all about their tax liabilities and is the proper person to file the tax return and get the withholding certificate. IRS says, we don't care because that seller is living in Peru and there's nothing we can do to make him play ball. So guess what, buyer? It's your job to send us those 8288 forms to prove that you have withheld the right amount or you have a withholding certificate that says you don't have to. Any questions about that? Okay, so this is kind of a breakdown for you all. And remember, if you want this PowerPoint, I'm happy to send it to you. This is kind of your breakdown of your obligations. So first, you have to inform the buyer if you are a foreign person. Please say it early because your buyer can back out if you do not reveal that to them at the time of contract. As we said earlier, you can do it doing it on the MLS would be sufficient disclosure, or you can just wait until you get the offer or the counter, or you make a counter offer and reveal it at that time, but you must reveal it. The certificate of non-foreign status, that is the thing that is in every closing file where there is not a foreign person. Again, you might not have paid attention to it, but it's in every file where there is no foreign person. It's either a separate document that the title company has or buried in one of their other documents like it is for us in our seller's affidavit. If you get the withholding certificate, deliver it to the buyer via closing, and that is done by using the escrow agent or the closing company as the intermediary. Remember, you have the application pending option if your withholding certificate has not had a decision made on it by the time of closing, but you can at least prove that you've applied for it. It is the buyer's option to either hold the withholding in the title company's hands until the IRS tells the title company how much they're supposed to send to the IRS. It's a buyer's choice. Or a buyer can say, sorry, you didn't have the withholding certificate in time. I'm not screwing around with you. 20% or 15% is going to the IRS and have fun getting your money back. The buyer has that option. Again, bring additional funds to closing if you need to satisfy. Sometimes, especially foreign sellers selling, if they haven't owned it long in this market, there is a damn good chance they are not going to have 15% of the sales price as a profit in that file, right? Because we know property prices have declined. So it's unlikely that after they pay title expenses, doc stamps on the deed, the realtor, blah, blah, it's unlikely that a lot of them are not going to have 15%. So they need to be prepared. It is 15%, not on the amount of money you've made on the property, on the sale price. Okay, does that make sense to everybody? So the contract requires that the seller can't wait and get the closing statement and say, hey, I didn't realize I'm gonna have to bring some money to closing. That is not an excuse to cancel the contract. They are bound to close and bring the money. And then the 8288 forms is going to be submitted to the IRS, and you need to make sure that your seller gets a copy of what was sent up. Okay, any questions about that? Okay, so best practices and recommendations, importante, guys, please in writing to protect you. Tell them you're foreign, you need to talk to a CPA because you're going to have withholding obligations. And if you ain't, and listen, you need to do it in writing, guys. And a text is not sufficient. It should be via email, because I know it's no great surprise to you that people conveniently forget the things that you tell them when it's relevant for them to forget it, or is in their benefit for them to forget it, right? I don't have to tell y'all. So please do it in writing. Communicate with the buyer and closing agent at the outset. We talked about that. You have to let them know by no later than when you counter or sign their offer. They need, some of your folks are not going to have a U.S. tax identification number. They have to get that. And that's part of why you need to tell them at the beginning, you better work with a CPA. It's taken a hot minute to get an ITIN number, and you need to tell them that. Explain to them. If you remind them about the recent IRS layoffs, they will then remember, oh yeah, that's right. And that will help them understand that this is going to take a hot minute, so they better not delay. So really, when you walk out of that listing signed appointment, you need to tell them tomorrow morning, you got to get your CPA on the phone and get started, because it's going to take a hot minute. Remember that the occupancy we talked about as an excuse, if it's less than 300,000 and the buyer's going to occupy it as a residence for the 2 years, or, and in which case there's zero withholding, or it's between 300 and a million and they're going to live there as their residence for 2 years, 10%. If you want one of those reduced withholdings, it is entirely within the buyer's control. It's important to understand that. The buyer does not have to sign his promise to reside there for 2 years after he purchases it, which would allow you to either avoid withholding if it's less than 300, or get the reduced withholding if it's between 300 and a million. Buyer does not have to sign. And as we talked about at the beginning, buyers are getting savvy and they're not liking to sign these things, because all they do is benefit the seller and cause problems for the buyer if the buyer has to move or something else and they're not able to live there for 2 years, and then their file has the bad luck to be audited, and now guess what, they're paying attorney's fees to wrangle with the IRS about whether they were being truthful when they signed the document and all that nonsense. So because of that, you need to warn your folks. They should not rely on the buyer to sign one of these. So I don't want any of y'all thinking, well, the house is only 279.9, so my seller doesn't have to worry about it because it's less than 300. No. Because remember, your buyer might not be willing to sign the occupancy document necessary, and they are becoming less and less willing to sign them over time, frankly, as they should be. I will tell you, as an attorney, when I represent a buyer in one of these transactions, I say no. Because what if the title company doesn't send the money? We have a local title company that messed up 3 FIRPTA files last year. That's going to come down on the buyer, and then the buyer's going to have to sue the title company. So there is really, if you're thinking about it, if you're representing the buyer, why would you want to sign this document? Why would you want your buyer to take on this additional potential obligation? You wouldn't. You say, we're going to send the withholding up, and then you can wait, seller, to get your money back from the IRS. I'm not involved. I'm done. So just get it in your mind that there's no magic of less than $300,000 anymore. There used to be more. I think more title companies used to push it, and more realtors used to agree to it because they didn't understand it. Because title companies I hate FIRPTA. Joni and I, when we have a FIRPTA file, we tense up, because everything has to be done correctly. Documentation has to be right. It has to be sent up to the IRS in time. We have to prove that they got it. So we have to keep these green cards, and we got to match the green card with the receipt and blah, 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 blah. So title companies are pushing it less because they don't like the liability and the time and all that. And buyers are becoming more understanding that it's probably not in their best interest, maybe in the seller's best interest, but not in the buyer's. All right, so Our key takeaways are, remember, FIRPTA is used to protect the IRS to ensure that they get capital gains on the increased value for their foreign sellers. Sellers have to determine their status, not you. Remember, we talked, you have to be US citizen, green card holder, or substantial presence test. That's it. No, I'm here on a visa, although they might meet the substantial presence test if they're here on a visa, right? No, I'm here on a visa. No, I've applied for my green card. No, I have an ITIN number. That's not, those won't work. Only 3 ways: US citizen, green card holder, or someone here who meets the substantial presence test. All right. Remember, they can apply for the withholding certificate. If we get it back in time from the IRS and it says, okay, they only owe $3,000, that's all we have to withhold and remit. That's why it's so important to get that so soon. If they've applied for the withholding certificate but haven't gotten it back from the IRS, at least if the buyer agrees, remember, it's the buyer's decision. If the buyers agree, we can at least hold it in our escrow account. And then when we get the IRS's response to your withholding certificate application, then the IRS says they only owe $7,000. Then guess what? We send $7,000 to the IRS and the rest directly back to your seller. So it's a much faster way, because waiting for the IRS to process the seller's tax return, which is what is going to happen if you do not at least apply for a withholding certificate. What'll happen is the title company is going to send the 15%. Now your seller is going to have to file a tax return and wait for that tax return to be processed before they ever get any of that money back. It also requires the IRS agent to be able to attach the FIRPTA money to that file, which they're not very good at. It's just rough on your seller. So there is no excuse. If you tell your seller in writing that they need to see their CPA and understand their options, they should be able to at least apply for the withholding certificate. And then most times buyers will agree to the full amount being withheld in the escrow account while we wait for the IRS to give a final decision. Most sellers will agree to that. Buyers will agree to that because they feel comfortable that the money's in the title company's account. So at least they know the money's there. Most people don't like the IRS. Most buyers understand that the IRS takes a long time. They don't want to be horrible to the seller. But at the end of the day, if they're represented by an attorney or they're otherwise just difficult, they may not sign. And if you don't have that withholding certificate, even if you've made the application, if the buyer doesn't agree, the money has to be sent up. All right, so the idea is proactive planning, early communication, and professional guidance. Again, I want to see an email out of you guys telling them that they need to see a certified public accountant or a tax attorney that understands and is good with FIRPTA. Now, I want to repeat what I said at the beginning. Joni and I have seen people posing as tax enrolled agents and CPAs and stuff, and we know they're not because they don't even have a basic understanding of FIRPTA. So you're going to make sure that you tell your seller that they want to use a CPA who is experienced in FIRPTA. If they don't, at least you've told them. I want you to be protected that you've told them. I don't want them to come to you 2 days before closing and say, I didn't know this was going to happen. I don't have the money to bring to the table. And why didn't you tell me I could have done this? And why didn't you tell me I can do that? And they're going to conveniently forget that you did tell them with your mouth. Also make sure that you get it in writing. And I got to say, that is a general rule for you guys about anything you do. I know it's easy to get in the habit of just texting agents and texting your clients, and that's wonderful and fast, and I love it. But when you have these kinds of text exchanges that are important, please go back to your office and immediately send an email to your client that says, as we discussed via text today, yada, yada, yada. That's all about just protecting yourself and the brokerage. Okay. All right, does anybody have any questions? This is when I get to figure out, did I bore you to death? Yes, we will send, I will put in the, this is the address to send your request for copies of the slideshow and or the recording. That's in the chat. Okay, anybody have any questions about any of this? Dory, do you feel comfortable now that you understand this concept? I know you were here last week.
Actually, Meredith, yes, I think you explained it very well. You reiterated, I mean, all over my notes, I have get it in writing, consult with a CPA or a tax attorney.
I sound like a lawyer, don't I? Get it in writing, get it in
Get in,
writing.
but you know what? At least we know that going into this, we don't have to be the experts, but we do have to protect ourselves. So you've reiterated that. I think I understand the basics, so I could at least, talk from a 30,000 foot view and then just
Exactly.
you guys do your jobs.
Exactly. And Dory and I were talking before everyone else got on. You know, the reason I give these presentations is so that you guys can have anybody that will take the time and invest in themselves and come, you're going to have a level of knowledge about things that other realtors walking around don't have. Many realtors are scared of FIRPTA because they haven't had an opportunity to learn it. Nobody's taught them. So when you go to a listing or a buyer appointment, telling someone that you've been trained in this stuff from the real estate perspective or trained on anything that I give you training on is something that should be part of your quote resume that you're giving to buyers and sellers because y'all know most people do not spend time to invest in separate types of training like this. So, when y'all come to a training, make a note of it and make sure that you include that as part of your, why I'm such a good agent, whether you're representing the buyer or the seller because you are distinguishing yourself from your colleagues by the fact that you're spending the time to learn and that's valuable. People should know that. All right, any questions? Anything at all? Okay, as usual, I'm going to put my cell number in the chat. You can call me regarding any transaction you have happening, whether you're closing with me or not, whether you've never closed with me or not. I want to help you. I want to keep realtors from getting sued. I don't want to see you on the other side of a transaction. I'd rather help you beforehand. And some of you that worked with me in the past know exactly what I'm talking about. I really do help you, and I don't care if it's closing here or not. I want you to know what you're doing. I have a heart for realtors. Some of y'all know, my family history, and I've been doing this for a real long time. I just want y'all to stay out of trouble. Of course, I want you to use my business, but I want you to stay out of trouble. So don't be afraid. Say, I can't call her because it's closing at meets and bounds and I should have sent it to her. Don't be stupid. Call me if you have a problem and then send your next deal to me instead of meets and bounds. Any other questions, guys? All right, so you guys have in the chat the email to send to Elisa if you want this PowerPoint, and the recording is also going to be available if you have any need for that or if you want to pass it on to some of your colleagues. All right, you guys, thank you. Thank you for your time. We'll see you on the next one.